Let's get started today. First things first, risk disclaimer. We know there's risk in trading. You know the deal there. Risk capital only. And everything I'm talking about is for educational purposes. You know that. All right, social media. Follow me on the YouTube channel, youtube.com/Chris Pulver. You're right here checking it out live. We're also streaming on Facebook and Twitter. I think on Twitch as well. But best place to find me, youtube.com/Chris Pulver, and my verified Twitter account at Real Chris Pulver. Let's get to the charts. Take a look at the S&P 500. Here's the SPX. Let's look at the weekly candle. Right now we've got markets just opening up. SPY opened up pretty much where we closed yesterday at 444.85, pushing up a little bit. Kind of stuck between a couple of liquidity pockets. You know, we might have a rally. I mean, if we have a full gap fill around 446, we might fade that back down. To the downside, 444, 442 is my big level today that I'll be watching if I'm a bear. If I'm a bull, I'm going after 449 and 450. Again, we opened up right around 445, so it makes sense that a rally to the upside, look for $4. A peak here around 446 or so, struggling to get to 446. We could fade. There is still a gap from the 5th, from 9/5. That would be Tuesday. So from Tuesday's close to Wednesday's open, there's still a gap around 448.50 to 449 on the SPY. So if I go to the SPY, go to a 15-minute time frame, I can also bring up another workspace here. Just give me a second. Let's do this workspace here. I'll open up another one. There we go. So this is the gap that I'm talking about from Tuesday to Wednesday, right here. So if the bulls are in control today, coming back to fill this gap around 448.50 to possibly 449. Again, opening right around 445, we could push that, $4 to $4.50 today. That's our 20 period ATR on the daily. All right. But like I said, if we don't, and I would say right here, if we don't take out this high, just looking at the previous day, so, we closed here on Wednesday, gapped lower on Thursday, and then filled the gap yesterday. So if we don't close above 446, 446.50, then I'd say the bears are still in control. Bears possibly fade that move back down to retest lows. Okay, so just some short-term direction I'm looking at for today on the SPY. Let's take a look at the Qs. Gap all the way up to 377. This is a big gap that got filled, not entirely, but filled pretty darn close. I mean, we're filling it this morning. Bring up my little drawing tool. So I had a chart alarm yesterday around 3, this low right here around 372.70. That did get filled towards closing bell yesterday, and then today we're ripping up here to kind of fill this gap a little bit higher. But on a positive side, we took some trades this week in Delta Trader, and it was a pretty easy straddle for the week, even though it was a short week with a holiday. It was trade from early in the week. We ended up closing out with $6.85 of credit compared to $4.24 in debits. So about $2.60, $2.61 in net profit. Some traders grabbed a little bit more, which is awesome. I love that when it happens, when I send an alert out and traders are still grabbing an extra 10, 15, 20 cents of profit. And that was a pretty easy trade to place on Tuesday. We closed out the SPY Wednesday. We closed out the Qs Thursday. And then today we can kind of sit back and chill and see if there's a good trade for us today. All right, so some good trading there. Let me log into YouTube, say good morning to everybody. I've got a couple classes today. I've got another Delta Trader class at 2 p.m. Eastern Time, and I also have a Portfolio Builder class at 4 p.m. Eastern Time. That Portfolio Builder, I'm going to kind of utilize that class and not the content. I mean, obviously, I'm keeping the content specific to the class, but the concept of growing my account. I'm going to start a new playlist on my YouTube channel and just call it Trader's Path to 100%. I'm starting a brand new account with this class called Portfolio Builder, and my goal is to double my account. It's going to be essentially a combination of position trading, taking advantage of carry trades and positive swap. And I'm also going to do the same thing and just kind of spot check on my equities account as well. So I peeled off a little bit of a personal equities account, and my goal is I'm going to try to make 100% in that as well. I don't have a timeline on that. I would say, ideally, if I could do that in the next 6 to 12 months, I'd be pretty happy with that. But if you'd like to, follow along and track that and see how I'm doing it, ask questions, engage, all that good stuff, then feel free to do that. So that'll be a new playlist, and I'll probably just do some weekly updates on that, and feel free to check it out on the YouTube channel. Okay. Speaking of YouTube channel, going live here. Just give me a second and say good morning to everybody. All right. Nice to see some names in class. Chris, good morning. Gary, good morning. FK, good morning. Larry, what's happening? Happy Friday indeed. And good morning. David, Lewis, Donna, Everett, good morning. Willard, good morning. Charles, what's happening? Barbara, good morning. Denise, how are you? Catherine, good morning. Jacob, good morning. Nice to see everybody. Good morning and happy Friday. There we go. Angela, good morning. For anybody, I see a lot of usual names. A lot of you are already in. Where can we join? Yeah, just on the YouTube channel. Just I'll create a playlist called a Trader's Path to 100%, and it's just going to be a video update for that playlist. You can again subscribe to the channel. If you click the notification bell on YouTube, that way when I do post videos, they'll pop up on your phone as a notification or pop up via email message or something like that. However you're subscribed. And but yeah, I'm going to take basically it's a currency account that I'm looking to take and make 100% on over the next hopefully 3 to 6 months. Um, I mean, again, I'm not putting a timeline on it because that's not how trading works. If I'm looking at 100%, and I don't believe it's going to take me 5 years to do it. But I think realistically, if I give myself the next 6 to 12 months, pretty methodical process, pretty good setups right now. The currency market, I'm super excited about over the next 6 months really, possibly 6 to 9 months as we get into April, May of next year. I think that gives me the best runway for a lot of these setups I'm looking at. And then, getting out of September, getting into the markets here for October, December, I'd say October to March, October to April, another pretty good runway to see if the markets are really willing to give us a directional play. And if so, I'm just kind of standing at the ready with a lot of cash ready to deploy. And, I've been accumulating. We've been dollar cost averaging. We've been keeping some ownership of shares we like. And so if we have a broader market lift or broader market rally or even a broader market sell off, there's going to be ways that I'm looking to make some pretty good profit. So I will show you. Okay. All right, let's go back into the charts. So we're at 445.90. I would say that today, again, short term, if we fail to take out this high on the SPY, then I think the bears are back in control to kind of take us back into the lows. 442 would be a fresh low on the week. We have those previous levels right around 443 from the gap yesterday. So if we have this high holding and the bears take us back down into 443 or 442, again, that's roughly that daily trading range, about $4 to $4.50. So for just a little outlook today, and anybody's watching here for Delta Trader, if we break above 446.50, then we opened around 445, just shy of 445. So we could probably start pushing towards this gap if the bulls are in control. So there's some directional play there. But if we fail at 446.50, I'm looking to see if we gets back down, and the big level would be the lows from the week and a fresh low here around 442. Okay. All right, let's take a look at some other stuff. Let's go to the weekly chart. I want to see what the weekly candle is. So the weekly candle is red on the SPY. A little bit of a wick to the south. Let's see how that finishes for the day, which will wrap us up for the week. Remember, next week we have CPI data. Excuse me, CPI data coming on Wednesday the 20th, which would be another, probably pretty big mover in the equities market. Probably some risk on, risk off trading, depending on how the market interprets that. But I do expect some good volatility next week. I do expect some good volatility also on the 27th. That is our, wait, I'm skipping ahead. Sorry. 13th, my fault. 13th is CPI data for the U.S. and the 20th is the FOMC. The Fed is not supposed to do anything. They're expected to stay the same and pause at that 5.5% interest rate. It's that window that the Fed has, 5.25%, 5.5%. So next week CPI, pretty good volatility, a full trading week, not disrupted by a holiday like we had this week with Labor Day on Monday. So Monday through Friday, CPI news. We'll see if the market wants to move pre-CPI, during CPI, post-CPI, but we're going to look to trade some options around that. We'll see what the market does overall. September effect is still in play, which means likely, the bears are going to maintain control. We talked about a lot this week in the trading rooms. Donna, good morning to your cat. My dog says good morning too. He's just laying right next to me. Let's see here. Make sure your cat doesn't punch in any trades for you. I don't think cats have your best interest at heart. Just kidding. All right. Let's go to the Fed Watch tool. Fed Watch tool. Pause is expected, right? So September 20th. So we have CPI next week on the 13th, which gives the Fed more data to work with. If this changes dramatically, which I don't think it will, that's a really high probability. I don't think this will change too much. The one that we will want to watch, okay, the one we will want to watch going into this next week's CPI and FOMC on the 20th would be if anything dramatically changes to the expectations for November. If there is any chance of a rate hike again for the Fed, it's likely November. Okay, and you can still see that the probability is 38%, and we have a 60% probability that nothing happens. So it could be just pause all through the year. Okay, and that's still what I expect is likely. That's higher probability right now. But if this dramatically shifts coming out of this September FOMC, if this all of a sudden jumps up to like 50-50, if all of a sudden this is 50%, this goes down to 50%, now we're talking, okay, well, that's kind of a decision the Fed has to make. And what conditions would cause that? Well, if we have CPI data that comes out higher than expected. And so if we go into the calendar, I'm not sure if we have a CPI forecast for next week. Let's go to next week on the 13th. So I don't see a forecast. Does anybody have an economic calendar that shows a forecast? So I'm looking, and primarily I'm focused on year over year. Month over month, core CPI, I watch that, but like year over year is really the big number. This is what the Fed is watching to see if it gets under 2%. So we have this third-party measure. Website's trueflation.com. This is ticking a little bit lower. We're at 2.7 recently, just trickling lower at 2.59. But again, well off of the lows around 2.09. Now, 2.09, we didn't see that in the last year-over-year print. We printed 3.2. All right. One more thing that could be a little bit stickier to inflation would be what energy prices have been doing recently. If you go to the Brent crude oil, UK oil, or you go to US oil, we have been pushing up pretty steadily. And I still think that with the actions of Saudi Arabia and the production cuts that are coming with supply and demand, oil's still going to push a little bit higher. Paying at the pump, AAA gas prices have been pretty much the same as they were a year ago, which isn't great. So they've been up. I mean, oil off these recent lows is up, 30%. So that puts a squeeze on the deflationary pressures quite a bit. And, do I think that oil is going to $100+ again? Not necessarily. I think that we hit, 90 to 95. We see some supply and demand levels. I could see us being in a longer term range, especially if volatility slows down a little bit. We hit 90 to 95, come back down to 65 to 70, and we find some sideways movement here, right? We had a huge trend, finally started to bury this low. I could see us going into more of a sideways range on oil for a while. Is that a satisfactory area where, we can have some, free flowing oil. China can come back online. There could be more demand, but prices without having major production cuts, we can see prices somewhat capped around $95. Does that make the Fed's job harder? Possibly. But the Fed is getting some good runway out of jawboning. They're getting some good runway out of the employment data, starting to soften up a little bit. So, our non-farm payroll numbers have been decent, but not crazy high. The unemployment rate ticked up a lot the last print we had. So non-farm payroll this month, which was last Friday the 1st, we had a big jump in the unemployment rate from 3.5 to 3.8%. So we have a lot of good things happening as far as what the Fed wants to see. But like I said, kind of data dependent, goes week by week, month by month, and the Fed is not giving the market any true transparency on what they're exactly going to do. This Fed Watch tool is probably the closest thing we have. Right? This has been accurate coming into an FOMC meeting. It's been 100% accurate going into the meetings since 2009. Now, part of that is just the Fed's goal has been more transparency into the markets, and that is why the saying is "Don't fight the Fed." I mean, right now the Fed is still they're not tightening any further. They have tightened enough, and I think that's where we're at. Is we're essentially at the plateau. Now, the reality is, and this is just my opinion, I think that if the Fed, I'm just going to go to some white space here. We talked about this week in the trading rooms. Going from 0 interest rates to 5.5 interest rates and pausing, okay, I don't think that we go higher, okay? But I think what the market is signaling is, the market's finally realizing that higher for longer is going to be somewhat a detriment to growth stocks, right? It's going to be anyone that has high debt, servicing high debt at high interest rates, refinancing at high interest rates. That's very difficult. I mean, we're seeing mortgage rates at 7+%. That's very difficult. So there is definitely a resiliency to the U.S. economy, but there is a slowdown for sure. And so pausing is fine. I think cutting is not necessarily a good sign. I think as soon as the Fed starts to cut, we are probably going into a correction mode in the markets. And I think that's why higher for longer right now, the market's okay, right? But we start to cut, we're probably signaling more of a reality of a recession. We still have a crazy deep inverted yield curve. Yields have been pushing higher, which means, it's been putting pressure on bonds. So yields going higher, bonds go lower, right? Stocks go lower. And that's been the last couple of weeks trading. Okay. C Trader instead of Meta. C Trader, I've heard of that, but I've not used it. No. I mean, all I use MetaTrader for. Are you talking MetaTrader, right? MetaTrader, I just have my robots running. Otherwise, I just use good old broker platform, web platform. Control my trade size, close them out on my phone, set my chart alarms on my charts here. But C Trader, I've not used before. I think I've got enough going on with a VPS that has like 11 accounts on it, and broker accounts all over the place, and I think I'm good. I've been kind of sick of moving money around for the last 15 years. I think my broker situation is pretty solid right now. I know it's just an application, right? Does it connect to MT4 or just connects to brokers? If it's not any better, I mean, if you're still paying spreads through your broker, it's just a trading platform, then I mean, I don't know what's better about it. Anything? Is it a different coding language? If you want to run automation, is it a totally different coding language? That would be kind of a big reset considering I got a lot of robots running. Speaking of robots, let me see how they're doing this week. I spot checked them. I think it was yesterday for the flex room. Let me go Perfect Storm, see how the Pro's doing. Perfect Storm Pro up 207 for the week. Perfect Storm, the OG, is up 200 for the week. Pockets Pattern Pro has been pretty quiet, but it's still up 183 this week. So we had some fresh trades closing up, which I'm happy to see. Equalizer, I had like 1275 going into yesterday. 152 on the buy side. And let's look at the sell side. Sell side 1532. So again, robots are good stuff. I'll just add that up really quickly. So 207. 207, that's Perfect Storm Pro. 200. 200 on the nose for Perfect Storm, the original. Pockets Pattern Pro was 183. And then my Equalizer Pro, 152 on the buy side. And the sell side, 1532. So 2274 in trades this week with robots. Not too shabby. We ended up closing out for 250 pips in the pound New Zealand for a flex trade that was discretionary. And then in equities on demand, we had a couple of assignments we got rid of. I took a loss on BITO. I took a loss on NEM, but we had some nice wins on the SPY this week, nice wins on the Q this week, and lowered the cost basis with some covered calls on each. So for the most part, pretty quiet. We have a lot of expirations next week. We'll be managing more of. I think some of them we've already looked at. We spot checked essentially everything this week, and I think we have 20 some expirations coming into next week's monthly. September 15th is a monthly expiration, and we'll manage. I mean, we've got some that we're in full profit on by a long shot, and we don't have to do anything. We have some we can manage. We took profit on BABA this week for, I think we had $2.68 a credit. We took like $2.25 net profit, close to that. So not too bad. Let's see here. Yep, Charles, I love that. Love the robot Perfect Storm pips every week. Yeah, I know. It's pretty awesome. Let's see. C-Trader pretty good. Got it. Perfect Storm Pro, Larry, the same ones that I've traded with the original Perfect Storm. So if you're in the class, you've got the currencies, man. I mean, I haven't changed the currencies in like 3 years. So it's basically like Aussie CAD, New Zealand CAD, Euro Swiss, Euro Pound, um, Aussie Swiss, New Zealand Swiss, Euro Dollar. Like there's like eight to 10 currency pairs. The difference between Pro and the original is just better drawdown management, and better confirmation. So we're not just scaling in based on a pip distance or an ATR distance. We're scaling it based on that distance plus confirmation. So it helps manage those lows. It helps you get in a little bit, better with either prices starting to turn to go your way, or you're starting to, dollar cost average with a little bit more patience. So if I was staring at an indicator and it showed sell, 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 but I'm in a buy zone based on a low, it would wait until we have at least some type of confirmation to buy. So just better drawdown management on Equalizer Pro. In fact, if I look at the drawdowns here, or I'm sorry, not Equalizer Pro, I meant Perfect Storm Pro. If I go to Perfect Storm, my drawdown right now is sitting around 15% on my original Perfect Storm, and my drawdown on the Perfect Storm Pro is around 12%. So that is the goal as I try to tighten up the drawdowns, and that makes a big difference. My Pockets Pattern Pro, that drawdown is sitting around 12%. Equalizer Pro, I don't really have drawdowns because I use stop losses on that system. And the reason the Equalizer Pro has these big numbers, like making 1,600 pips this week, is because I do trade that on every currency pair. That's not bad, but also I've warned traders that Equalizer Pro on all currency pairs. The reason I'm willing to trade it that way is because I am using stop losses. But when we have aggressive trends, for example, my Equalizer Pro will get hit pretty badly with some of those losses. But it's okay. I mean, again, that's why I have other robots running. But I have a buy side and a sell side. So essentially, I'm hedged on Equalizer, where I have two accounts. One runs buy only, one runs sell only. And if I'm losing on the sell side, typically I'm winning on the buy side, which kind of helps offset some of that risk. So I can reduce the size of those losses and end up walking away typically pretty profitable for the week. Okay. Yeah, Jacob, if you're interested, yep, you can contact your educational specialist for that. Yep, your rep for sure. Okay, I haven't done a lot of chart showing. I've just been talking, so let's get into some charts here. We've got a few more minutes. Again, watching some direction. Pretty quiet day. Pretty happy overall that it was pretty easy trading for Delta Trader. Pretty straightforward with not a ton of expirations. I'll do a lot of management next week in equities on demand. Flex was solid. Nice little trade, and we just missed another win on the pound Aussie. That was the disappointing piece. Like we missed this trade right here. I'll go down to a smaller time frame. So we had swing trades set up on the pound Aussie and the pound New Zealand in the flex trading room, and we wanted to get in right here. So we had high to low, and we looked to get in right here. If I use that straight line, you're going to see that it was very, very close. Now, right there, we just missed that entry. We missed this entry. It was 97.50, and this high was 97.47. That really sucks because that would have been a nice push for about 250 pips. Okay. So we did not get filled on the pound Aussie. So we ended up canceling that trade because yesterday we took profit on the pound New Zealand. And this was pretty much the exact same setup, but the difference here is we got filled where we wanted to get filled. We had high to low, we had price pull back, form a high right there, nice little swing trade. It actually pushed to a fresh low overnight, which again, I'd be fine. We took profit here yesterday at the lows. So, had we been filled on the pound Aussie, pound New Zealand, that would have been a nice little combo for about 500 pips for the week. The pound Aussie missed us by 3 pips, but we capitalized on the pound New Zealand. So all good there. The dollar index is something that we're paying close attention to over the next couple of weeks. So here's the weekly time frame on the DXY. It's still bullish. Okay, we're going into 8 straight weeks of bullishness on the dollar. If we continue to see yields push higher, bonds push lower, and stocks push lower, the dollar's probably going to maintain bid. This kind of rule here, we're not overbought. That's what I want you to make sure of. We're not overbought. Okay, the weekly time frame not overbought, the daily time frame not overbought. So there can still be a little bit of stretching. We also don't see necessarily. I don't see RSI divergence. So if we have another 1 to 2 weeks of dollar strength, it's in the cards. Like technically, it could play out. And where does that take us? Well, if we see a run to this yellow box, or we see a run back into this pocket on the DXY, if I'm looking to short it, it's really straightforward. Don't short the dollar until we get a trend line break. So if it just runs a couple more weeks of strength, that's fine. Let it run. and then we'll start looking for some topping patterns, and then we'll start looking to short the dollar. If we're going to see a Q4 to Q1 rally in equities and we're going to get some risk off flows for the rest of the year, the dollar is probably going to be a dropper, right? If equities and stocks go up, the dollar is going to probably take it on the chin. So confirmation is pretty straightforward, and that I think that's going to help us kind of align when it's time to start activating some trades and look at some directional plays. Okay. Oil, like I said, up 30% off the lows. I think oil has room to run to 90 to 95 on U.S. oil. Possibly UK oil goes to 100. We go to gold and silver. They're still going to take their cues from the dollar. Dollar gets stronger. Gold and silver both going to drop. Bitcoin very vulnerable to the downside with the potential bear flag. So high to low, grayscale news right here. That grayscale ETF news against the SEC did not do enough to bring it back up above 30,000. So I have a chart alarm set, 28,200 and 25,200. Whatever one activates, I'm interested. But like I said this week, it looks way easier for the bears to just push this thing lower. Trading volume on Bitcoin has been way, way, way quieter. In fact, I thought I saw this yesterday. It's at like a multi-year low. Like over the last 3-4 years, we've hit like these new lows in volume in Bitcoin. So I still think it's a good buy if we get down to 20,000. If we get to 20 and 17, I'll still buy some more. I'll still dollar cost average into some more. But the reality is, I'm not selling it. I'm just going to wait to buy lower. Okay, and this is to me a more of a longer term buy and hold, but this is a good little check on, what's the overall market cap? What's Bitcoin doing? It's still roughly, 40% of the entire crypto market cap. I think between Bitcoin and Ethereum, that's over 50%, right? Okay, so good there. Yes. All right. Any other charts and questions? Any other charts you want to take a look at? Any other currency pairs? 36.35 on the dollar Sing. This one is getting closer to my profit target. This will probably be one of my first big positions to close up for a nice chunk of profit. Let me check my flex stock really quickly. So on the dollar Sing we took, it's a trade we've been in for a while. We've scaled into, and it might be pretty early on. Dollar Sing. Yep. So I'm showing 3 entries. I actually have 5 entries. Okay, we're going after that yearly pivot. I have 3 entries here that we've taken as a group. I added in 2 other trades on these equal pullback levels right here. So we scaled in as a group. I added in on this area and this area. Reason I didn't include those in the group setting is because we already tested here, right? So if you're holding 3 positions, those look good. This is my 4th. This is my 5th. Those still look pretty good. So I'm trying to get back to the yearly pivot. This could possibly come up into this pocket, but I measured symmetry this week at 37.10. We got a yearly pivot at 37.50. I'm happy there, especially with 5 positions running. So the closer it gets, profit's likely going to be taken hopefully in the next couple of weeks on the dollar Sing. That should clean up a nice little probably 1,500 to 2,000 pip win, which I will be happy with. NQ, I think futures this morning are going to be somewhat quiet. Go down to the smaller time frame. Actually, let's go to a medium time frame here. So NASDAQ futures, let me go Qs for a second. I'll go back to NQ in a moment. What's our weekly candle doing on the Qs? So it's kind of an indecision week. We had decent volatility. We measured the high and low. We just moved over $10 for the week. Okay, which was enough to get us out of a nice chunk of profit for the Qs yesterday on that gap lower. Yeah, I mean, off of the last week of trading into August, we're still kind of inside that. So, like I said, next week CPI, the week after that's FOMC. I would suspect that the market is very capable of pushing to fresh lows or pushing to fresh highs. I'm just going to position accordingly for it. So I don't really have a strong directional bias. I think that the Qs can make all the excuses in the world to go up. We did have some bad news this week on Apple, which did drag the overall markets down. If anybody saw that on Apple, looks like China's playing hard. Playing some hardball against Apple right now. So Apple's down for the week, and the big news was basically they're banning iPhones. And they're trying to go more in-house, like Huawei and other Chinese tech companies are trying to get some of their market share back. But anyway, it was a big disruption to Apple. Apple's a $3 trillion company roughly with market cap, and that will absolutely affect the SPY and the Qs for sure. So long story short, I mean, yeah, the bigger these stocks are, the bigger these market cap weighted stocks are, if something bad happens to them, they will drag everything with it. So a hit on Apple, a dip on Nvidia. Now that we're over $1 trillion in Nvidia, I mean, we're still, we came back up to Tesla highs at 500. We've dipped back down $40 again. So from 50 to, I mean, we've dropped $50 here, dropped 40 to $50 here. It's like tons of volatility on Nvidia. And again, the reality is we're trading around 32 times multiple right now. And is that sustainable? I mean, it might be. I just read yesterday or this week that one of the high ups and executives at Nvidia cashed in like $42 million worth of stock options. So if you've got insider selling, I'm not saying, and look, that's not necessarily signaling the top, but it's like, somebody's getting paid. So why not? I mean, the stock's up 200 freaking percent. I mean, if I had stock options in the company and I was sitting on, I've had, a few $1 million in my package and all of a sudden it's worth 200%. I'd be tempted to take some money off the table as well. You know? Yep. So I posted let me see, I've got an article on it. Let me see if I can find that article. I just got it through TradingView in the charts. I'll find the article through the China band. I mean, is it really detrimental? It's not super detrimental, but it's enough to affect the share price of Apple. And obviously, like I said, a $3 trillion market cap company, it will drag on everything. So here is the article right here. So there's the article right here. China's iPhone ban throws wrench in Apple's profit engine, 30 million units at risk. So they were saying something like, is it like 1 cent per million, give or take? I'm trying to think that's what it said yesterday. I'm trying to recap and summarize. How much could Apple lose? So for every 1 million iPhones sold, there's a potential 1 cent per share impact. So if we have 30 million units at 1 cent, you're looking at about 30 to 40 cents. Now, again, you're thinking like, well, that doesn't matter, right? Apple's trading at $179. You mean it's going to go down to $179.30? Maybe, right? But I think just the overall sentiment with like, if this really dips into the profit engine and this slows down Apple's growth, forward guidance and revenue expectations are going to be less. Apple is one of the most successful companies in the world by far. But if all of a sudden they go from 8% growth to 6% growth or 5% growth, or they have to re-engineer their profit plan, that plateau is enough to possibly put a pause in the stock, right? And if we have a lot of really successful companies that are struggling to go higher, I don't think that we're going to have a broad market anything. If you're 25, 30, 40% of your market cap stocks are going nowhere, you know? So we'll see. And it could just be a blip where it's like, yeah, just buy it now, buy the dip. But we're sitting at all-time highs on Apple, so I understand. I understand how we could stall a little bit. But if we're here and it's some type of broadening pattern, then I'm still looking for it, right? I mean, this goes to broadening pattern lows, if this is broadening pattern highs, didn't draw that very well. But if this is a broadening pattern high, broadening pattern low, I mean, could Apple sink a bunch? I don't know. I don't think we're going back to 2020 lows or 2022 lows, rather. I don't think we're going that low. But something to keep an eye out for. And I just think that the bigger these companies get, the bigger the market cap gets, the more weight is on everything that they do. So good news and bad news, it's going to drag everything with it. Huawei, I don't even know is that even publicly traded? Is that how you spell it? Defector. Does anybody have a ticker for Huawei? Let's see. That's Apple. HUAWEI. HUA. So I spelled it right. I just don't have a ticker for it. Anyway, I mean, if you're trading Huawei, I mean, one way to get some exposure to it would be something like KWeb. That's a Chinese tech ETF. That's one way to watch it. So kind of like the S&P, right? If you trade the SPY or the Qs, like trade the NASDAQ if you want some tech exposure without having to pick the needle in the haystack. So KWeb could be your China ETF as well. Okay. So, all right, everybody, it's 10:05. I'm going to wrap things up. Just to recap for today. Sorry it's been quiet in the Discord group this week. It's been a busy week. We got a ton of stuff going on here for the firm that I work with. Also on the side hustle side, I've got there's an LPGA tournament out here, and I've been actually helping a couple of players. So tournament ready, tweaking some clubs. And anyway, so it's just been busy in the afternoons and evenings, and I haven't had a chance to post like I usually do. I will post in my blog section later, but like I said, I'll be starting up a little video series on Trader's Path to 100%. I'm going to try to take a currency account and double it. I'm going to try to take a stock account and double it, and it's going to be pretty straightforward. It's just a little bit of ownership in the equity account and a lot of options, and then the currencies. I've just got setups that are so good right now. I've got an entire class around it called Portfolio Builder, and we're starting that today at 4 p.m. So we will be trading live at 4 p.m. So if you're in that class, I'm excited to be starting things up with everybody. I still have some content to finish up for that class since it's been such a busy week, but I'll have that ready for next week. And all good. Okay. All right. So I'll let you go for today. Thanks for being with me. We'll be back on Monday. Which is the 11th. We've got CPI next week, so it should be a pretty busy week. I do have some travel coming up here, so there might be some disruption. Thursday, Friday, for example, I'll be on the road. We may not have a live session on Friday. We might have some disruptions in the trading rooms as well, but I'll let traders know that. And then, anyway, traders know like there's going to be kind of disruption with my travel schedule, but there's video updates, there's Telegram updates, there's Discord, so there's ways to find me and stay in touch. But I will do my best to make sure that nobody's left behind and we're still up to speed and everything. Okay, have a great Friday, have a great weekend, and I'll see you back here on Monday. Thanks, everybody. Bye.